Hi, everybody. My favorite accounting class, Honors College Accounting. How are you guys doing? Just want to say a personal shout out to Cooper, Jada, Evan, Jack, Gabby, Kelly, Taha, Carson, Jose, Austin, and Zach. I really miss you guys, and I wish we could do this in person, obviously. But I think you're going to find this kind of fun. This simulation. We're going to take it really slow. You only have a couple more weeks, but this is a great end to our work this year. So I'm going to always remember this class as being the inaugural Honors College Accounting class at Naperville North. And I'm so proud of all of you. I'm proud of myself, actually, because I learned it right along with you. So I just want to go over what this is all about and then just do February 1st transaction. So we're going to go real slow. We're going to explain the whole company, and then we will do some transactions together. Okay, so this is going to be your work for your first day, and I believe it's Tuesday that you will be, whoops, that's something else. Let's see, Tuesday. Oh, I have the wrong calendar up. Let's see. Lots of calendars, lots of changes. Yes. So actually, yes, Tuesday the 28th, you'll be listening to this if you want to listen to it early. Tomorrow, Monday, that would be great too. So whatever you want to do. And then later on, the calendar has changed. This is the new May calendar that the district put out. So Thursday, I'm hoping to get through February 2nd and 3rd with you. So we're going to start out real slow because I want to explain the whole process to you and kind of the background behind this company. Okay. All right. So let's take a look at the narrative. And I know if you were with me in the video call on Friday, we kind of went through this, but we went through it very quickly. So this is a business simulation similar to what we did with Authentic Threads, but this is going to be a little quicker, and we're not going to do the whole thing. So I'm not sure how far we'll get. I think through February 8th. So the 30-second transaction possibly will get through. Okay. All right. So this business is a company. It's a manufacturing company. So the manufacturing company actually has raw materials it has to buy, and it has machinery to put these items together, these finished goods together to sell to customers. Okay. So they're like badges, pin-ons. They're I guess kind of like awards. Like if someone got first place, it's a first place award, second place award. A lot of these companies do like trophies. Um, and if you vote, like I voted, stickers, things like that. So promotional items, kind of feel good items that specialty companies would sell. Okay, so we're going to be looking at inventory of materials, work in progress, so WIP, right, and finished goods, and the journalizing of all that, the paying of employees, and so just really what we've been doing for the last 2 months. Okay, that's what this is going to be. Plus what we did, quite honestly, August, September, October of accounting one. We haven't lost any of that, and you're going to find some transactions that are super easy that you're really familiar with, and you're going to be happy they're there because it's going to be something you really know well. All right, so bear with me as I go through this. This is a simulation that Ms. Hicks uh, grabbed. She put it together in digital form, and she did a great job. She's also making videos, but I wanted to make a video as well. So I'm going to put my videos up, and when she finishes hers, I'll put hers up too. Um, she knows this deeply, and I'm learning along with you, but I figured you might want to hear my voice. So here we go. We're going to do this together like we do in class. All right. So we went over, so what we're going to do is you're going to record the transactions from all the information below, and they are organized by date. So you got a lot of different things going on every day, just like a business, just like a school day, right? There's just a lot of things. I meet with a student, I teach, I put in a grade, I talk to a parent, I go down to a counselor. Same with a business, right? You're paying people, you made a sale, you got to buy goods, you got to put stuff together, you got to keep track of those costs. Just every day of work is really busy. All right, so you're going to be journaling with the 5 journals, and I'll show you those in a moment, and you're very familiar with those. The only thing that's kind of different, and it's not really that different, is the materials purchases journal. Okay, so we call it materials purchases instead of purchases. With a merchandising corporation, we buy finished goods and we mark them up for resale. With a manufacturing company, we buy the raw materials, put them together ourselves, and then we sell them. Okay, so the accounting for a corporation that's a manufacturing corporation is a little more complicated, actually, a lot more complicated than a service business and a merchandising business. Okay, so let's go down. There will be some T accounts, but this will be dealt with. You can ignore this for now. You'll see the T account sheet available to you, but please don't put anything in it now. You can ignore it, and I will guide you through that once we get there. All right. Another workbook or Google Sheet workbook that you'll get is the materials ledger and the cost ledger and finished goods ledger. Right, so this was chapter 19. That was actually, we went through this pretty quickly. So hopefully you watched some of those videos. If not, you can go back and watch them. So here we go. Okay. And we're going to start with February 1st. And we're only going to do February 1st for your first day. All right. So February 1st, let me take a look at, so these are the sheets that you should have open. So I labeled my demo because I'm going to be progressing through this with you. So these are the journals. And okay, move this up. So this is the general journal. Here, I'm going to move this guy up. And okay, here's the sales journal. So if you make a sale on account, you would put your transaction in here. Materials purchase. This is buying things on credit. So buying raw materials on credit would be the transaction would be recorded in the materials purchase journal. Right? If you pay cash for them, that would go in the cash payments. The general journal, you're going to be doing a lot of end of month transactions, which include a ton of payroll. So primarily, with the exception of a few, a lot of your transactions for February in the general journal is going to be payroll. And they are right here. I'm actually going to switch these. And these are end of February transactions. We'll get there later, not today. Cash payments, and you'll see that I have gray and I have blue here. That means that this helps me guide you. So we're going to have 2 transactions in cash payments. So if you would like to highlight those first 4 lines, those are the ones that we're going to be in today. Cash receipts, where we have 1, and I highlighted that or filled it in gray, and we're going to be receiving money from a customer. And then we've got our T accounts where we keep our balances. We are not going to be in this today. Okay, we're going to actually be starting out in sales journal, but at first I'm going to show you the 3 ledgers that we'll be working in. So this looks familiar. So if you did take a look at those videos, you might want to review them again. This is the materials ledger where we actually we keep track of raw materials that were ordered, that were received in the warehouse, that were issued into production, and we keep a running balance. And all the while, too, we keep track of the costs that it cost us, and that has to do with cost of goods sold, has to cost, what's our ultimately our profit that we're making when we factor in the cost of the raw materials, the labor, and the sales that in the sales force that has to be paid, that it costs to get the product out there and into the hands of a customer. Okay, and we're going to keep track right here of all those costs. These are our cost sheets, and we'll be in here today for each item. So there's a lot of costs. There's materials, and there's labor, and there's also overhead that's going to be taken into account too for each one of these items. So these are all the items that this company creates. So flag buttons, let me just go down. Your number one button, who would get that one? I don't know. Maybe it's Cooper because he declared himself captain of our accounting contest that we never did. So Cooper, you would get the number one button. There you go. Let's see. And some of these we're going to have to fill in ourselves. So they are a mystery right now, but they won't be a mystery shortly. Okay. All right. Then the last one is finished goods ledger. So the finished goods ledger is these are goods that have been completed. We're going to maintain the total cost of what it costs to create these, and then we're going to ship them out to customer, and we are going to keep a running balance of all the finished goods that we have. All right. So if a certain amount was shipped, we're going to subtract out what we have in inventory, so we know exactly how much we have in inventory to sell to our customers. And if we're running low, we know demand is going to be up. We have to maybe put an order in to make some more of those things. So here are all the items. So we've got a flag button. So here are all the products that are created by this company. First place streamer badge. There you go. First place. Then we got USA Flag Rosette badge with streamers. That's a fancy badge. It's got some streamers on it. So we're obviously going to have to buy streamers to make that, right? That's going to be part of our cost of goods sold. And the Yes We Can button. Not sure what that's for. Maybe we could wear that around at this time. Yes, we can beat this thing that's dragging us down, right, you guys? And then we've got a 3-inch. Oh, we got different types of Yes We Can buttons, and your number one button, and that's it. All right. So these would be our finished goods. All right. So we've got materials going in to making it. We've got costs associated with making the product, and then we've got the finished goods. So we know how much we can sell. All right. So that's my overview. It's my overview of the whole project. All right, so we're going to start with, let's go down to the narrative of transactions. So right now, before you start, you should have your Progressive Badge journals open. You should have your ledgers open as well, and you should have your instructions. So I'm starting on page 2. Okay, so February 1st, we got a bunch of things that happened. Busy day in the office. Okay, February 1st. So we got 5 transactions that we're actually probably more than that we're going to be dealing with. And then the next day we'll go on to February 2nd and 3rd. But let's start off slow. I like doing that. All right, so February 1st, we sold 1,200 of this type of 3-inch USA flag buttons on account to Marketplace Stop and Shop. So on account, you know what that means, right? What does it mean? Means that we did not take cash yet, that these folks, what we did is we shipped out product to them, and then we're going to invoice them, and they will pay us later. Okay, just a little review of accounting 1. All right, the first thing we're going to do is journalize the transaction in the sales journal. So this brings us back to last year with accounting 1. So it's always nice to start with something that we really know. So we're going to start with this, the sales journal, and let's take a look at how much these are. So we selected, it's given to us $1,560 in our sales journal. Okay, so let's put the date. And again, I grayed out the lines that we're going to be filling out today. So February 1st, the account title, who are we selling to? Marketplace Stop and Shop. So we're going to type in Marketplace Stop, is it in Shop? I think so. Yep, Stop and Shop. Okay. And the sale number, it says, is 420. So that's given to us. 20. We're going to skip the post reference for now. And the amount is given to us $1,560. Again, that's sales credit, which is increased, and accounts receivable debit, which is an asset, and it's also increased. So let's fill in these as two separate accounts. And I think we'll make that color. Okay, two separate accounts, one special column, easy. Everyone got that? Okay. All right, let's go back to the transactions. Now we're going to record. We're going to record in the finished ledger, in the finished goods ledger. Progressive Badge Company uses FIFO, first in, first out inventory method. All right, so whatever was received into inventory is what we are actually going to be selling. Okay, so, and a lot of these items look the same, whether they were made, today or a month ago, but the cost associated with making those items sometimes is different. So remember, we have to remain consistent with what inventory method we are using. And Jada, if you're listening to this right now too, we're going to be learning LIFO, FIFO, and average weighted cost method to our next week in Accounting 1. All right, so we're going to follow the procedure for the sale on account. Okay, so what we're going to do, the next step, is we're going to go to the finished goods ledger. So we're going to go to the other sheet. And it looks like we sold these flag buttons, the 3-inch kind. All right, and we're going to start over here in the shipped and issued, okay, because it says we are recording, actually, we sold these, so we're shipping them, okay? That's where it tells us that we're doing that. So the ship issue date is February 1st. The sales invoice is given to us, 420. The quantity is 1,200. And the unit cost is given to us as well. And it is it given to us? I have 71 cents. Let's see. Maybe that's given to us. It's 71 cents. I'll have to check that. Let's just put that in. And then we've got total cost. All we would do is multiply 1,200 times 71. And we'll enter it. Okay, and I'll spread this out a little bit so we can see it. Total cost, $852. Okay, so the balance, the running balance, this may already be done for you, is that we bring that running balance over. Actually, you know what? I'm going to take this, I'm going to cut it, and I'm going to put it under here. So if you want to do that as well, you can, because that first line is actually for our balance, because we're going to keep a running balance right here. All right, so February, this is not done for you. February 1st, 2011, it automatically formats. we're going to take the quantity that we had in inventory and we're going to subtract out the 1,200 that we're shipping off. So we've got a balance of 1925. We're going to bring down the costs 0.71, and I'm just going to copy this formula down. So it's 1925 times 0.71. Questions on that? I can't hear you. Just kidding. Okay. All right. So the next one, next transaction is going to be receive cash on account from Team Souvenirs. Oh, another easy one. Okay, awesome. So we receive cash from on account. So we're going to go into the cash receipts journal. All right. So it tells us the amount, $1,846.30. And the receipt number is 305. All right, so the date is February 1st again, still on our busy February 1st day. All right, and our customer who is paying is Team Souvenirs. Spell that right? Souvenirs. I think that's right. Okay. And let's just go right over to accounts receivable. And it's going to be 1846.30. And let's just all reference that. And there we go. All right. Let's go back. See what else is going on in February. All right. The next one is, let me move this guy. This next one is ordered 2,000 3-inch metal button discs and 2,000 3-inch metal pin backs. Purchase order 201. So now we're going to the materials ledger. All right, so that's the other one. So we're out of this one and we're going to the ledger. So let's go to the materials ledger. And we're going to record two things. So if you want to take a look at what we're doing first, this is going to be actually for our next day's work. So you can ignore that. That's for February 2nd. Right here is where we're going to be putting some information in for February 1st. And I believe 3 metal pin backs. Here is where we're going to be putting in some information for that purchase as well. All right, so those two spots. All right, so the date, you all know the date right now, still February 1st. Whoops. Okay, the purchase order number is 201. The quantity is given to us 2,000. And that's it. Okay. All right. Trying to think what else. If there's anything else we need to do with that. I don't think so too. No, because once we place this order, we're going to receive it. Okay. Then we're going to issue it out to the manufacturing space, the place that makes the department that creates these things. When they place a rec order, we're going to issue it, and then we'll keep track of our running balance of these 3 metal button discs. Remember, these discs are not being sold. We are not a merchandising company. Okay, these guys probably are a merchandising company. They make 3-inch metal button discs. We do not. This is part of our product. It's a raw material. We're going to buy it from, this is business B2B, business to business. This business is selling us this. We're using their product to create a bigger product. All right, enough lecture. All right, next one is, guess the date. You're right, February 1st. And this purchase order is the same number. They're both come in the same box. And we ordered 2,000 of these as well. There we go, 2,000. So we got 2,000 ordered. We'll see when we got them. Whoops, that's a little too much. And we are on to the next one. Any questions? Email me if you have a question. Okay, the next one is paid cash on account to A1 Supply. All right. So obviously, let's think about what's going on. If we're paying cash on account to A1 Supply, A1 Supply is our vendor. All right. So we bought some supplies from A1, and we received it. They invoiced us, and now we're going to pay on their invoice. Okay. So that's an accounts receivable for us. It was, and now we're paying cash, and we're going to reverse that. Okay. All right. So we're going to go back to our journals. Yay. Let's go back to our journals. And we'll go to cash payments since we're making some payments here. Right? And you can see we've got 2 transactions that we're going to take care of. All right. Once again, February 1st. A1 Supply is our vendor. And it says we paid $2,400. And we'll type 2,400 again, or cell reference, whatever you would like to do. So we paid these guys off. And ultimately, we would go to our ledgers, update that, hopefully zero out the balance until the next time we charge something from them. All right, next one is paid cash for liability of employee income tax. All right, so the employee income tax that we collected from our employees is 2,600. So employee income tax would be the federal income tax that we withheld from our employees' paychecks, the Social Security tax we withheld, and the Medicare tax we withheld. So we are also, now we're going to be paying the government entities the money we collected that we were holding. That was a liability to us, and now we're getting rid of it. We're paying cash and we're unloading that liability. Okay, so this is a bit of review from first semester this year and also from last year, second semester. All right, so February 1st, again. Okay, so this is employee income tax. Oops. And it's a payable because this is going to be a debit. So we are reversing this and zeroing out this liability. We took the money from the paychecks and now we're paying it off. So we're getting rid of the liability and it's given to us. So somebody looked it up in the table and got it for us. That was so nice of them. 2269.56. All right, we're not going to do the cash yet because we're going to write one check and get rid of all these payables. The next one is Social Security tax payable. That amount is 2244.90. And we're not going to put the cash yet. We're going to wait because we're going to add those up. The last one is Medicare, the 1.45%. And you know what? Tax payable. And that's given to us as 518.06. Okay, and we're going to cut a check to the government to cover all 3 of those liabilities. So we've got a sum, and we're going to sum up these, and we are good to go. You guys just did day 1 of a manufacturing company. Congratulations. Nice job. So on Thursday of this week, we will be handling February 2nd and February 3rd. Okay, so that's going to be a busier day, but I'm going to walk you right through it. Okay, I might have you do a couple on your own to say, stop the video, see what you can do. I don't know. Maybe I'll just do the whole thing with you. We'll see how it goes. All right. So it was great to see a lot of you on Friday. I hope everyone can join next time. I really just like to use our time together to just kind of catch up, make sure you guys are doing okay. I know most of you are graduating, with the exception of Taha. I'll see him next year. But I just keep me posted about what's going on. And please share your personal emails with me too, because I want to keep in touch with you. I know you can always reach out to me through my school email, but I'd like to, keep in touch after you guys are graduated and that. So anyway, we will continue this later. It's Sunday afternoon here, and I hope you're having a good weekend. Okay, take care. Bye.